Alright, good day everyone. Welcome to 1stusFx Academy. So on this video, we'll be doing a weekly analysis on gold for this week. This is practically the first week of the month of June 2026. So last week we saw gold sell massively because of positive news on USD, majorly because of the NFP news. Now we want to take a fresh approach to every asset we're trading at the beginning of the week. So first of all, let's go down to the weekly time frame. Now if you noticed, I spoke about this last week and I said I wanted to see price fill up this last week, the week of the candle, at least to the 50% level, and we can see an engulfing candle currently. So this sets us for a more bearish tone throughout the month of June. So I expect throughout the month of June to be bearish and price to sweep these lows. So what you want to do is you want to mark out these lows. Here it's around 4100. Okay, so now we know where price is going. Price is definitely going to take out those lows, and then most likely we are going to see some buys or some retracement. Now that we have a bearish approach on the weekly time frame, let's go down to the daily time frame. So on the daily time frame, we can see that we have a bearish engulfing candle. You can clearly see that price is currently bearish. All right, so now you notice we have a low here. Can you see this low? The price close to below it. See, that is what we call a previous support, which should become resistance. All right, so you can see price closing below it. So that's a daily candle. Now if you look down to your left as well, you'll notice we have this daily low that price has not yet purged. Let me mark it out. This low here, this is the daily candle. All right, so this is the daily time frame. Price has not yet pushed that. So if we extend this to the right, you would see price has not yet pushed it out. Price has not yet taken that liquidity. So you can see clearly price has not yet approached it. So we're going to see some sweep of that liquidity tomorrow, which is today when the market opens, and then we might see some manipulation, some buys on Monday. All right, whichever happens first. Now personally, I expect price to be bearish throughout this new week because the weekly time frame already tells us that price is bearish. Okay, so let's go down to the 4-hour time frame. So now on the 4-hour time frame, we can see a series of bearish candles. All right, let's go down to the 1-hour time frame. So on the 1-hour time frame, we can see we have a supply zone right here, what we usually can call an order block. So personally, I like to use the bodies of the candles if the wicks are very big, especially when I'm looking at the higher time frame. So this is an order block, all right, that we could easily sell from. All right, so basically our bias is bearish. All right, our bias is bearish. Now we go down to the 15 minutes time frame because we want to go down to the lower time frames to fine-tune our entries and minimize our risk. So on the 15 minutes time frame, we can see we also have a, as you can see here, we have an order block here. All right, so you can see that as well. So this is a very powerful sell zone. So we have a lot of confluences. A previous daily low was around this area, so support becomes resistance. We have a 1-hour order block here. We also have a 15 minutes order block here, and this is what we could call an inducement. All right, so we call this inducement. So we have these highs here, we can call this an inducement. So price moves from internal to external. Okay, so there you go. So we can call that an inducement. So if you take your Fibonacci, for example, remember, all right, so I want to take note of this high to this low. All right, so you can see clearly that our order block is just around our areas of what premium where we want to sell. Even our inducement is above equilibrium, so these align very well with our confluences for selling. So we want to see price is above equilibrium, which is our selling zone. Okay, so when the market opens, what I will expect to see, I expect the market to instantly buy, most likely open with a gap up, mitigate this, and then begin to sell Now if you want to fine-tune your entry more better, you could go down to the 5 minutes time frame. All right, so on the 5 minutes time frame, you're going to see, you can see clearly we have other blocks here again. So this is another other block right here, as you can see here. This is another block. Now because this is the 5 minutes time frame, I like to use the entire candle, both the wicks and the body. So why am I doing this? Price may not get to this other block on the 15 minutes or the 1 hour time frame, but on the 5 minutes time frame, price will definitely get here. And you can see we have a very short-term internal liquidity here. See these highs here that was created here, so you can take this as internal liquidity or inducement. Okay, so basically this is how I would approach the market. Now I'll be very skeptical if the market just begins to sell off without approaching those zones. So what I want to see is if price sells off immediately and goes below these areas, I want to see price stay below this. Notice this is a very psychological area. This is if you notice, it's around 4,300, so it's a psychological area. So we want to see price stay below it and continue to sell throughout London and New York session. All right, so I hope you learned something. If you have any questions, please drop them on the comment section. Make sure you like this video, share, and you subscribe to this channel. I'll see you in the next video. Once again, this is 1stusFx.